Good day to everyone and welcome. Thank you for making the time to be with us today. I know that everyone joining today has responsibilities, meetings, and priorities competing for attention. So I sincerely value the time you have set aside for this session. Some of you have already been observing Invorium for months, while others may only recently have begun exploring the company. In either case, today we'll give you a detailed and practical view of the ecosystem and the thinking behind it. For those who don't know me personally, my name is Mark Ferrer, and I serve as a Chief Marketing Officer at Invorium. My background combines strategic communication, digital systems, operational development, and the construction of high-performance teams. Together with Robin and the wider Invorium's team, our focus has been to build a financial infrastructure that connects capital and professional market expertise in a more organized, transparent, and scalable way. With that context established, let us move directly to the presentation, and I will share my screen now. So let us begin. Yeah. So the logical starting point in the central question, what is Invorium and what purpose was it built to serve? What then is Invorium? In straightforward terms, Invorium is a CeDeFi financial infrastructure whose corporate materials record authorized share capital of $416 million, and it combines centralized administration with decentralized and blockchain-enabled functionality to create a controlled environment for capital allocation. The operational supervision, risk procedures, and transaction transparency between participants and the business counterparties. The ecosystem is designed to connect three major groups: the capital belonging to individual participants, capital belonging to companies, and professional trading and arbitrage organizations that require the liquidity for their operations. The basic mechanism can be summarized as follows. The participants place capital into structured deposit agreements on the platform. That liquidity is then made available through collateralized short-term credit agreements to trading and arbitrage companies that have passed Invorium's internal review process. Those professional companies they can use the borrowed capital in their own market operations. After the credit cycle is completed, they return the principal and pay interest for the use of the funds. A corresponding portion of that interest is then allocated to the participants through the platform. That is the model in its simplest form, and it's the foundation for everything else we will cover. It is equally important to define the boundaries of Invorium's role. Invorium is not presented as an exchange, a retail trading terminal, a hedge fund, or an internal algorithmic trading operation. The company itself doesn't execute the trading or arbitrage strategies. Those activities are performed by external professional operators with their own teams, the systems, infrastructure, and their market experience. Invorium's function is to provide the framework around those activities. The company evaluates financing applicants, organizes the credit protocols, establishes collateral requirements, manages the movement of capital, maintains accounts records, provides operational reporting, and supervises the overall structure through which the financing processes take place. Invorium LLC is registered in Saint Vincent and the Grenadines under document number 4382 LLC 2026. The jurisdiction offers an international corporate, the framework that supports global operations, cross-border accessibility, and an adaptable legal structure for serving the participants and the business partners in different countries. So, let me condense the identity of the company into one clear statement. One more. Invorium is a centralized administrated financial platform supported by the decentralized capabilities. It links the private and corporate capital with professional trading and arbitrage businesses through the collateral-backed credit protocols. Invorium doesn't present itself as a trader, the exchange, or the investment fund. Its primary product is the infrastructure that makes the relationship between capital and professional market operators organized, measurable, and manageable. You may have heard me use the term CeDeFi several times. Let us now clarify what that means in practice. CeDeFi is the operational basis on which the platform is built. Some of you already work with this concept regularly. So, while others may know the two separate models but not the combining them. The first model is the centralized finance, or CeFi. Traditional banks, investment companies, brokers, and professional managed financial institutions operate through centralized structures. There is a recognized legal entity, an accountable management team, internal procedures, compliance controls, and a defined organization responsible for client operations. The weakness of this model is often limited by transparency. The clients see balance and statements, but they rarely see the detailed movement of deployment of their capital behind those figures. And the second model is the decentralized finance, or DeFi. The DeFi relies on blockchain networks, the smart contracts, and digital protocols instead of a conventional financial intermediary. It can provide speeds, open access, and a high degree of on-chain visibility. At the same time, it can be technical demanding, exposed to sustainable volatility, difficult for non-specialists to navigate, and subject of a regulatory environment that is still developing in many jurisdictions. So, the CeDeFi combines the selected strengths from both environments. From the centralized finance, it takes the professional administration, custody procedures, risk controls, identity verification, the compliance processes, client support, and organizational responsibility. And from the decentralized infrastructure, it takes the digital asset flexibility, the continuous operation, rapid settlement, and the possibility of blockchain verification where relevant. So, the easiest way to remember the concept is this. The CeDeFi places modern digital finance inside a managed and accountable operational framework. It seeks to combine the discipline associated with professional financial institutions and with the accessibility and efficiency of blockchain technology. So, if we convert the comparison into practical criteria, the CeDeFi structure gives Invorium the capacity to provide regulatory and identity procedures similar to centralized finance rather than anonymity common in purely decentralized environments. We can provide operational transparency supported by platform reporting and, in relevant cases, the blockchain data. A structured asset custody and defined security process instead of requiring every participant to manage all technical risk alone. The greater speed and digital asset flexibility than many conventional financial systems can offer, and the continuous monitoring and professional oversight rather than relying exclusively on autonomous code. So, this combination is the practical value of the CeDeFi. It is intended to reduce the disorder, the complexity, and uncertainty that often surround decentralized markets by introducing procedures, accountability, and verification, and of course, the managed infrastructure. For Invorium, the CeDeFi is not simply a branding term, it is the design principle behind the platform. It enables the structured deposits, the collateral backed lending, the continuous monitoring, account level reporting, and the allocation of results within one environment that can function continuously and serve participants internationally. Now that the architecture is clear, we can examine the market problem that made the creation of Invorium relevant. The underlying market imbalance is easy to recognize. Why? Because in one side, there are so many individuals and companies that possesses capital and want to use it productively. Many of these people don't want to become professional traders. They don't want to spend every day starting charts, managing multiple exchange accounts, testing strategies, monitoring volatility, or carrying the emotional pressure of making constant market decisions. They also have valid reasons to avoid transferring money directly to no traders, of course, and or organizations that they cannot independently evaluate. And for the other side, we have established trading and arbitrage businesses. These companies may already have experienced personal, but also, they have specialized software, access to exchange, tested methods, and a history of market activity. But their challenge is often not a lack of expertise. It is the difficulty of obtaining consistent, organized, and transparent financing that allows them to increase the scale of their operations. So, this creates a clear gap. The capital is searching for professional deployment while professional operators are searching for a scalable liquidity. That was the traditional being missing in a structured connection between the two of them. So that leaves a large number of people with capital, but without practical access to professional operators on institutional terms. Invorium is designed to address that problem by aggregating the smaller and larger allocations through one platform and organizing their deployment through credit protocols. This is the meaning of P2B, people to business. It creates a road through which people can connect with the companies that hold the capital and connect with businesses capable of using the capital professionally. The value is not limited only to introducing one side to the other. Without an infrastructure, such as Invorium, for example, an individual will need to locate professional traders personally. They verify their legitimacy or operation history, negotiate a relationship without institutional support, and carry the legal, technical, and operational risk alone. So that is difficult to scale and expose the participant to unacceptable uncertainty. Within the Invorium model, the company performs the counterparty review, structures the credit relationship, requires the collateral, we manage the operational flow and provide account and transaction information. So the participant is therefore not expected to recreate an entire institutional due diligence and lending framework independently. At the participant level, the principal decisions become the amount of capital to allocate and the protocol that best corresponds to the intended strategy and the time horizon. So, this is also why the CeDeFi infrastructure is important to both sides of the ecosystem. It supports secure asset handling, KYC and AML procedures, organized financial models, professional infrastructure, ongoing monitoring, regular reporting, and the distribution of capital at scale. The strategic purpose of Invorium is therefore to make a level of structured access historically reserved only for larger investors, and now we want to make it available to a wider group of participants while preserving the processes and controls required for professional activity, financial activity. Before entering the product portfolio, let us address the annual subscription. Since it is one of the first operational questions people arise, an active subscription is required to access the complete ecosystem and create new deposit contracts. The annual cost is $49.99, and it covers a 12 months period. A reasonable question is why an annual subscription is necessary when the platform also earns income from credit activity. Well, the purpose of this is to separate the cost of maintaining the user infrastructure from the capital used in the credit protocols. This creates a clear division between account services and the investment related operations. The subscription supports four principal areas. The first, it contributes to the administration of the personal bank account and the back office, including servers, system maintenance, data processing, updates, and the stable operation of the dashboard and reporting tools. Second, it supports the assignment management, verification, and technical protection for participant wallets within the ecosystem. The third, it funds access to professional support for onboarding, account configuration, technical questions, and the operational assistance. And fourth, the last, it contributes to the continuing improvement of the service, including new functions, integrations, security deployment, and the performance optimization. In practical terms, the subscription is not presented as a payment for membership in a club. It covers the digital and administrative infrastructure that maintains the account environment, that processes user activity, and support reliable operation of the platform. If the subscription, for example, reaches its expiration date, existing deposit protocols are described as continuing according to their original terms until the completion. The participant doesn't lose any active contract, so the restriction is not additional deposit contract can be opened until the subscription has been renewed. This policy preserves the separation between existing contractual activity and the future access to platform services. We can now move to the 5 deposit protocols and the strategy profile of each one. The protocol range is designed to accommodate different entry points, commitment periods, liquidity preferences, and the long-term objectives. Every protocol operates within the same CeDeFi credit infrastructure. Each includes daily visibility of accrued results, account reporting through the dashboard, and floating performance linked to actual operations. The difference are the minimum amount, contract duration, indicated monthly figure, and the treatment of earned profit. So, every quarter, we conduct a deep review of our marketing system. And here it is important to emphasize this mechanism has already demonstrated its practical visibility and sustainable results. It allowed us to adapt the strategy in a timely manner, relocate the resources, and strengthen the most effective areas. Thanks to this approach, the system remains flexible and competitive even under conditions that the high crypto market turbulence. We analyze which areas yield maximum results, where the sustainable partnerships aliens are forming, and where the competition is intensifying, and of course, where the new growth opportunities are opening up. We evaluate not only standard marketing metrics, but also the crypto industry specific metrics, liquidity quality, the stability of arbitrage flows, the conversion into active traders, and the reliability of partners' models under conditions of high volatility. We operate in an environment where the changes occur constantly. New exchanges emerge, liquidity shifts, the fees and spreads transform, the influence of regulatory factors intensifies, and the market participants' strategies becomes increasingly complex and algorithmic. So, in such conditions, it is impossible to operate on a static model. Here, only the adaptability, precision, and data-driven execution win. Starting from July 1st, we were increasing the yield of deposit protocols for the investors. This change applies to both the newly opened protocols and those already active. We view this as a natural step in the system's development and a result of the overall efficiency of our ecosystem. So, an automatic increase of yield was applied to all deposit protocols. The update of these average monthly yield indicators are as follows. The first protocol is Nano. It has a minimum investment amount of $100 and a term of 6 months. The Nano is the access protocol. Its purpose is to let a participant enter with a lower commitment, observe the platform over 6 months, and become familiar with the operational flow. The monthly yield was updated from between 4 and 6% up to 7.5%. Next is the Nano, is the Light. Light protocol has a minimum investment amount of $250 and a period of 9 months. The Light protocol extends both the time horizon and the capital commitment. It is positioned for participants who understand the mechanism and they want a more meaningful allocation without moving immediately into a long-term strategy. The monthly year profit was updated from between 5 and 7% up to 8.4%. The next protocol is Vision. It has a minimum investment amount of $500 and a term of 12 months. The Vision is the balanced profile. With a 12-month term, it sits between flexibility and the duration and is presented as a central option for the middle level participants. The monthly yield was updated from between 6 and 8% up to 9.7%. The next protocol is the Master. It has a minimum investment amount of $1,000 and a period of 18 months. Master is designed for those participants who accept a longer 18 months horizon and a larger minimum allocation in exchange for a higher indicated operating range. This protocol was updated the monthly yield from between 7 and 9% up to 11.9%. And the last, and not less important, is the Legacy protocol. It has a minimum investment amount of $2,500 and a period of 24 months. Legacy is structurally different because it uses capitalization. In Nano, Light, Vision, and Master, the profit described is accruing daily and becoming available for weekly withdrawal without disturbing the principal. But in Legacy, the accrued profit remains in the contract and is added to the productive base. The following cycle, therefore, operates on a larger amount, creating a compound effect over 24 months. So, this monthly yield was updated from between 5 and 7% up to 9.5%. The corresponding trade-off is liquidity. Legacy doesn't provide the same weekly profit withdrawal flexibility as the other protocols. The accrued amount remains active for the full 24 months term, and the participant receives the principal together with the accumulated compound result at the completion. The capitalization is limited only to the legacy protocol because compounding requires time to produce a meaningful effect. So, applying the same structure to very short contracts will reduce the strategic value. The portfolio therefore gives participants a clear choice between periodic access to accrued profit and a long-term accumulation strategy. Several characteristics apply across the full protocol portfolio. For example, supported deposit assets includes USDT, USDC, Bitcoin, Ethereum, and Tron. On the credit side, the collateral may include gold-backed digital assets such as Tether Gold and Pax Gold, as well as Bitcoin, Ethereum, and Tron. The platform materials don't state a maximum deposit amount. A participant may begin with a $100 nano minimum or allocate a considerable larger amount, subject to the applicable protocol terms and personal risk assessment. So capital can also be divided across one protocol. For example, a participant may choose a protocol such as Vision for periodic liquidity, while allocating another portion to Legacy for long-term capitalization. The ability to combine the time horizons is built into the portfolio structure. So every indicated returns remain part of the floating model. The percentage shown are operational figures rather than guaranteed fixed interest. The distinction should remain central when evaluating any protocol. Now, let us continue with the P2B partner network within Invorium. So let us go step by step. The first, what is the P2B partner network? At first, P2B means people to business, as well we know. In simple terms, we can understand it as a structured connection between people who participate in the ecosystem and the commercial growth of the company. Within Invorium, the P2B partner network is a partnership model, meaning a collaboration model. Its objective is to allow participants who truly understand the product, who use it, and who trust the structure of the ecosystem to help expand the community and receive rewards for that activity. Now, why did Invorium choose this model? Well, it's interesting because the company made a strategic decision. Instead of investing only in the traditional advertising, it decided to strengthen a collaboration model with people who already understand the ecosystem. For example, when a person arrives at Invorium through a partner, they don't arrive completely alone. They arrive with an explanation, with guidance, with someone who can help them understand the processes, the platform, subscription, the protocols, the dashboard, and the general structure. That is the heart of the P2B partner network, not only attracting people, but guiding them correctly. Now, let us enter to the practical part. How can a partner earn within the P2B partner network? Well, the Invorium compensation plan includes three main and two additional income streams for participants. First, commission reward from the sale of annual subscriptions. Also, we have the bonus from the purchase of CeDeFi deposit protocols, one-time bonus for achieving a rank, additional bonus for monthly team turnover, and last but not less important, ambassador bonus is the participation of partners in the company's profit. So let us start with the first income stream, the commission reward from the subscription sales. To gain access to the investment opportunities of Invorium's ecosystem, as we already said here, CeDeFi protocols, each user must purchase an annual subscription priced at $49.99. I'm often asked the question, why exactly are the subscription funds used for? Well, we already mentioned that the client's funds go directly to the company and they are used to ensure the operation of the ecosystem, support the infrastructure, and secure personal clients' accounts. Upon the registration, 5 personal cryptocurrency wallets for the main digital assets are automatically created for each user: Bitcoin, Ethereum, Tron, USDC, and USDT. All wallets are exclusively tied to a specific user, and it serves as their personal addresses for operations within the system. The company's main priority is the investor security. That is why every client receives their own cryptocurrency wallets, which ensures transaction transparency, secure storage of the funds, and effective management of digital assets. Now, let's look at this in the practice. For example, for each paid subscription, you will receive a $10 commission. However, there is a very important rule here. The commission rewards are paid only for partners in your first line. What this means? Well, for example, Sophia registered using my referral link and purchased a subscription. In this case, I receive a commission of $10. Next, if Sophia invites Lucy, and after Lucy purchases a subscription, the commission reward is received by Sophia, but I receive nothing because Lucy is in her first line. Thus, each partner receives a commission exclusively from personally invited participants. I want to show you an example. Suppose that you have 200 partners in your first line. Each of them purchases an annual subscription costing $50. From each subscription, you will receive a $10 commission. So 200 partners per $10 is equal to $2,000 in income. Moreover, the commission is recurring. What this means, if a year later these same 200 partners renew their subscriptions, you will receive again a commission reward from each renewal. So let us now move on to the one of most interesting types of income, the commissions from the purchase of CeDeFi deposit protocols. The ecosystem operates on a P2B model, which allows you to receive rewards not only from personally invited partners, but also from their structure up to 5 levels deep. So every new partner starts with the Explorer rank and receives the following commissions. For the level 1 is 8%, for level 2, 7%, level 3, 6%, for level 4, 5%, and last, level 5, 3%. Let's see this with another example so you can understand more clarified. Let's assume that our friend Sophia has already purchased a subscription and decided to put his money to work for her. She opens a nano deposit protocol for $1,000. Since Sophia is in my first line, I immediately receive $80. But what happened is Sophia were in my 5 referral level. Well, in that case, I receive $30 because she is in my 5 line of my structure. That is, each participant receives a reward according to their place in the structure. But we have one important feature here. These commissions are recurring. So if after 6 months Sophia deposit terms expires and she decides to renew it for another $1,000, in this case, the system again credits commission rewards to all the participants in the structure according to their levels. Thus, you receive income not only from the new purchases, but also from subsequent renewals of these deposit protocols. Also, as your team grows, your rank also grows, and with it, the payout percentage increases. So, upon reaching the builder rank, your commissions become higher. For level 1 is the 9%, level 2, 8%, level 3, 7%, level 4, 6%, and last, level 5, 4%. I want to briefly tell you about the rank achievement bonus. In addition to increase the commissions, the company pays the one-time bonuses for reaching certain ranks. For example, the builder is reached with $100,000 of turnover and it has a one-time bonus of $1,000. The funds are automatically credited to your main balance, after which they can be withdrawn or used within the ecosystem. The leader rank is reached with $500,000 and it has a one-time bonus of $5,000. The legend is the next step with $1 million of turnover and it has a one-time bonus of $10,000. An ambassador is related to $1,500,000 of turnover. This is the highest rank in the system. At this level, our company doesn't pay a one-time bonus cash. However, it grants a privilege that significantly exceeds a one-time payment in value terms. We will talk about it a little later. I'm sure this bonus will truly interest you. So let's return to the commissions from the sale of deposit protocols. And I'm going to show you another example. In this case, let's assume that after reaching the legend rank, your payouts for the first line increase to 12. For example, Sophia decides to open another deposit protocol for $1,000. If previously at the Explorer rank you will have received $80, then at the Legend rank you will receive $120. It's quite simple. Now we're moving on to the additional monthly bonus. This is one of the most interesting type of rewards in our marketing plan. I want to explain it in detail, how it works, and how much extra you can earn each month. For example, the essence is very simple. In addition to your main referral income, the company grants you an extra percentage based on the amount you have already earned during the month. The size of this bonus depends on the total financial turnover of your team. Let's watch another example. Imagine that at the end of the month, your referral income is $39,000 and your total team turnover has reached the $500,000. In this case, you are awarded with an additional bonus of 15% of your monthly income. That is, in on top of the $39,000 earned, you will receive an additional 5,850. As a result, your total monthly income increases to 44,850. This is precisely why developing your team and increasing the team turnover directly impacts to your personal earnings. Now, let's look at the other levels. If your team's financial turnover for the month is $100,000, you will receive an additional bonus of 5%. If the team reaches a turnover of $250,000, the bonus month for this is increases to 10%. Upon reaching a turnover of $500,000, you receive a 15% of additional reward, and when the team turnover reaches 1 million or more, the company pays the maximum monthly bonus, 20% of your total referral income for this month. So, as you can see, this bonus creates a very strong motivation, not only to earn personally, but also to help your team grow. The higher the results of the entire structure, the larger your additional income becomes. So, therefore, every new partner, every new client, and every increase in your team turnover brings you closer to even higher payouts and the financial results. One moment. Now it's time to talk about the final and most prestigious type of reward in the entire B2B partner network is the ambassador bonus. Here, in every person's lives, a moment comes when they outgrow their usual boundaries, when their goals become larger and their influence extends far beyond personal results. So, in the P2B partner network, this pinnacle is exactly the ambassador status. At this level, the partner begins to move from simply participating in the network system to participating in the larger business model of the company. The important idea is this. Ambassador is not only about earning from your team, it is about reaching a position where your results can connect with the growth of the company itself. Once someone reaches this level, they are no longer limited only by the income generated inside their own structure. They become part of a broader model, a profit sharing model. An ambassador is not just another rank in the marketing plan. It is the recognition that a leader has managed to create a strong organization capable of bringing value to thousands of people and making a significant contribution to the company's development. This is the level at which a person stops being just a partner and they become an integral part of the larger business. This is where the concept becomes much more powerful because you begin earning together with the company, not only inside your personal team. So, the ambassador status is awarded to leaders who the team turnover exceeds the $1,500,000. And most importantly, this status is permanent. It doesn't need to be confirmed every month, already qualified. Having reached these big ones, a leader becomes part of the company's elite community forever. So, however, the real value of this status lies not only in the recognition and authority, Until you reach the ambassador level, your income directly depends on your personal actions and the result of your structure. But after obtaining this status, you move to a completely new level. You begin to receive rewards not only for the work of your team, but also from become a participant in the portion distribution of the entire Invorium's company. This is exactly where the most interesting part begins. The company has a special fund called Ambassador Hub. Every month, the company directs the 5% of the entire profit of the reporting period into this fund. After that, the funds are distributed among the all active ambassadors proportionally to their contribution to the business development. I want to show you an example so you can understand more clarify. There it is. Suppose that you have reached the required team turnover and received the ambassador status. Currently, there are 10 ambassadors in the company, and the total team turnover of all holders of this status is $40 million. Now, let's imagine that at the end of the month, the company's profit amounted to $10 million. According to the program rules, the 5% of this amount is directed to the Ambassador Hub. This comes out to $500,000. Next, your participation share is calculated. Since your contribution is 3.75% of the total turnover of all ambassadors, you will receive the 3.75% of the Ambassador Hub fund. As a result, your income for this month will be like this. 3.75% from $500,000 is equal to $18,750. So, ambassador is not just a title, it is a different way of thinking because you start thinking like a business person. You're no longer focused only on immediate income. You begin to focus on building a long-term position inside the ecosystem. And this is not a one-time payout. This is not a bonus for closing a rank. This is not a special promotion. This is participation in the company's profit distribution. In fact, you are transitioning from an earning model based solely on personal activity to a model of participation in a larger business. You become interested not only in the development of your own structure, but also in the growth of the entire company. After all, the more successful Invorium develops, the higher the company's profit, the larger the ambassadors have become, and the higher the payouts to each ambassador. Now, I want to make a platform walkthrough with you so you can be more familiar with our ecosystem. There it is. This is the dashboard. This is the participant operating center. It consolidates active contracts, accrued results, cycle status, balances, and the overall account position. The value is immediacy. Instead of waiting for a periodic statement, the participant can review the current account state whenever they want or they need it. This doesn't replace, of course, the formal reporting or due diligence, but it gives the participant continuous visibility into the information recorded by the personal platform. Now let's see the wallet section. In this section, we manage the support assets within the ecosystem. It shows the balance of USDT, USDC, Bitcoin, Ethereum, and Tron, and provides the interface for funding, receiving accruals, and preparing the withdrawals. When a new external withdrawal address is added, the platform will require a confirmation. This is an intentional security layer designed to prevent an authorized person from redirecting the funds. The one account per identity policy, KYC controls, and address confirmation all work together as part of the account protection model. Now continue with the transaction session. This, I think, is the most complete operational history of the account. You can see all the deposits, accruals, withdrawal requests, all your commissions, all the status changes, and timestamps. This section record serves two purposes. The first is it gives the participant a clear internal audit trail. And the second, when an operation is on chain, the participant can use the relevant transaction data to verify it independently outside the platform. Now let's continue with the P2P partner network. In this section, this panel consolidates operational partner activity. It displays the referral balance, the referral profit, the turnover, partner count, your referral link, your current rank, the monthly rewards and bonuses, and the structured partner list. This partner list can show the IDs, countries, registration dates, total investment, generated referral rewards, the number of partners associated with each participant, and filtering by referral level, as you can see here. This is not only a payment screen, it is a management dashboard for participants who choose to develop a team, of course. Now let's continue with the settings. One second. The settings area functions as accounts, digital identity, and security center. Here we have this tab, security, and the document verification is the first barrier. The KYC requires identity confirmation and a selfie so that your account is connected to a verified individual and protected against identity substitution. Also, we count with the passkey technology. This technology allows compatible devices to use the biometrics authentication, such as Face ID or Touch ID. Unlike a traditional password, a passkey is designed to resist guessing and many common forms of credential theft. Also, we have the password management. This requires additional confirmation through the available communication channels, SMS or email. Due that our company works globally with mobile operators, you can fastly manage your account security. And last, we have the active sessions. This panel provides a live view of the devices, operating system, browsers, and recent activity associated with your account. If an unfamiliar session appears, the participant can identify it and take immediate action. Now go to one very interesting, and I personally feel proud of this section, Insights. This is one of the platform's most important differentiators because it moves the conversion from general claims to operational evidence. The section is presented as an aggregator connected to the operational system of the trading and arbitrage partners. It allows to the participants to review the data associated with the ecosystem activity rather than simply wait for a final account result. The metrics may include the number of active deposit protocols, all the active subscriptions, the daily turnover of the company, the profit generated through the partner activity, and the amount and percentage of collateralized loans returned. Also, we have the arbitrage panel. This panel goes deeper by showing movement of assets between exchanges, blockchains, and wallets. Depending on the operation, for example, we can see the participant can see the transaction hashes, swaps, bridges, asset directions, and the subsequence through which funds move. As you can see here, absolutely traceably data. Because almost all of you already understand the basic idea of arbitrage, we can summarize it in one sentence. An operator seeks to buy an asset where it's priced more favorably and sell it or exchange it, whether the value is higher, while maintain the fees, timing, liquidity, volatility, and of course, the execution risk. Let me briefly conclude with an important point: security. Because trust, and confidence is the Invorium's foundation. Our system, our security system model includes mandatory KYC and AML procedures, encrypted user data storage, enhanced authentication controls, confirmation for new wallet addresses, one account per identity policy, monitoring of suspicious sessions, and server-side protection against unauthorized access and DDoS attacks. Security is not only a single certification or one-time event. The presentation states that Invorium conducts internal and external audits covering authentication, server infrastructure, APIs, service communication, user data protection, suspicious activity, the monitoring, and resilience against unauthorized access. Now I want to show you in our website, in our platform, if you go all down, you will see the legal information panel. And here you can see the documents. If you open this link, you can see all the company materials reference. For example, you can see the certificate of foundation, the certificate of exemption from direct taxes, certificate from exemption from import duties, and the minutes of the organizational meeting, where it was recording the authorized share capital. Also, the registration is intended to be independently searchable through the relevant Zenbisen and Grenadines registry. If you go to this website and you select the entity name search, here you can type our name of the company, and here, if you type Invorium, you will see the legal registration of the company, so you can verify it by yourself. So, remember one very important thing. Invorium connects capital with professional trading and arbitrage companies through structured credit protocols. The company itself doesn't present the model as direct property of trading. It manages the infrastructure around selection, collateral, capital allocation, reporting, account security, and distribution. The protocol portfolio gives the participant different choices based on the commitment, duration, liquidity, and the capitalization. The dashboard, transaction history, wallets, settings, and insight sections are designed to make the participant's experience measurable and visible. The P2P partner network is an optional growth channel that remains separate from protocol performance. At the same time, informed participation requires more than understanding the marketing presentation. Every person should verify the current legal documentation, product terms, the risk, fees, withdrawal procedures, and operational evidence, and should make decisions, of course, according to the personal circumstances, the risk tolerance, and independent professional advice. For those who want to continue with us, the next step may be reviewing the legal documents, exploring insights in greater detail, speaking privately with the team, or opening an account only after completing the personal due diligence. All official information and access points shall be confirmed through the Invorium's website and its verified communication channels, includes Instagram, Medium, Telegram, X, and YouTube. Please avoid unofficial profiles or individuals who cannot be verified as authorized representatives. This is all for today. Thank you all so much to all of you for your attention, your time, and your interest. See you the next time.